All right, welcome back to the Money Minds channel. Realty Income. Realty Income is one of my favorite dividend investments. If you don't know, if you've been following me, you know I dote on Realty Income all the time. I definitely have more than one video of Realty Income. However, you can add this one to the list. Realty Income just announced their 126th dividend hike, dividend increase, more money for your pocket without you having to do anything. They just gave us a raise, y'all.
I'm not fucking leaving.
For all of my Realty Income investors out there, you just got a raise. I love getting raises. You know what I especially love? I especially love getting raises for doing absolutely nothing. That's what we're here for. This is the dividend channel where we talk about money. We talk about how to get your finances up. We talk about how to get your stocks up. We talk about how to get your investments up. And Realty Income, man, listen, 126 consecutive increases of dividend, never missed a dividend payment, never stopped paying dividends, and they are one of the top 3 companies, one of the top 3 REITs, okay? Y'all know how many REITs it is, all right? If you are familiar with the investing REIT industry within the stock market, then surely you know that there are tons of REIT class assets out there, but Realty Income is just one among 3, okay, that is considered a dividend aristocrat, which means that they have successfully paid dividends for not only paid dividends, but they've also paid and increased those dividends over the course of the last 25 years at least. Okay, so that is what a dividend aristocrat is, and Realty Income makes that list. But we're here to talk about a couple other things because in my searches, okay, and in my evaluations of stocks, I'm a part of multiple different groups, right, and communities. And so inside of there, I'm aware, right? I keep watching. I keep what everybody is saying close to heart, just so that I can mine through the information and sort of select what I need to in order to take away and put it to use, right? Because a lot of people. Listen, if you've never been a part of any type of investing community, I urge you to do so. This is not an ad. I am not going to tell you which one to join, but just find a community, okay, of like-minded people that are trying to achieve the same types of things that you are, and join. Okay, and then I urge you to at least 3 to 4 times a week go into that community and not only participate, but ask questions, get involved with what's going on, and do not be afraid to ask even the most simplest of questions that you think you may have that seems dumb. But a lot of times you can find a lot of good help in these communities, okay, especially in the dividend community. There's a lot of people out here who are trying to achieve exactly what it is that you and I are trying to achieve, and you can find a lot of good help out here. But I brought that up to say this. In my travels, okay, of researching Realty Income for this particular video, I ran across some naysayers, right? And I ran across some naysayers and people that believe that Realty Income is not a great investment right now. A lot of people were selling out of their positions, believe it or not. And I wanted to address it. I want to listen. I saw a lot of people on YouTube. I saw one guy on YouTube, and this guy is just going back and forth, and he's flip-flopping on Realty Income. He's got about 10 or more videos of Realty Income, okay? And in each video, he's just going back and forth. One thumbnail, the title was green. The next one is red. The next one is green. The next one is red. Listen, I don't like those type of channels. Yeah, I know that they're very clickbaity as for the views, right? But I don't like people that flip-flop on their investment, all right? Pick a side and stay there. I'm not telling you not to pivot. Pivoting is exactly what we're supposed to do when we have more information. But this guy doesn't seem like he's pivoting. He just seems like he's very unsure of his investment. And I want to tell you why I'm so very sure of my investment. Well, I'm so sure of Realty Income right here today, and we got some data to go over. So bear with me. I'm gonna try to make this as less boring as possible. All right, but let's get to it, y'all. You heard the data that I stated 126 consecutive increases in dividends. June 11th, 2024, Realty Income Corporation, the monthly dividend company, okay, today announced that it has declared an increase in the company's common stock monthly cash dividend to 0.2630 per share up from 0.2625 per share. Now, that seems like a very small number, but listen, all increases matter. Why? Because you didn't have to do anything for it. All you're doing is holding the stock and you're getting a raise, okay? And the dividend is payable. Y'all know when it's payable. I don't have to go over that information. However, I will read their statement going forward before we continue. It says, as the monthly dividend company, we remain dedicated to operating in a manner that provides shareholders with dependable, growing dividends. This marks the fourth dividend increase of 2024 and the 648th consecutive monthly dividend throughout our 55th year history. Okay. So listen, I want you all to bear with me here, and I want you to understand something. So I want to go over the pros and cons, because I want to go over what people are saying and why they're divesting from Realty Income, why they're going away from it, why they think that it's in trouble, right? Right now, just about with everything that you look at in the REIT industry, it's down, right? There may be one or two or, a handful of exceptions here or there. But for the most part, the REIT industry is taking quite a beating, right? They're taking that Rocky Balboa beating, right? And, well, that's what happens, right? That's what happens when you have feds increasing the price of everything around you. Rent is up, right? You got a price hike on your groceries, right? Y'all know it. I say it all the time on this channel. Y'all are very aware of the price hikes, right? Inflation is through the roof, which means, guess what? It's going to cost you to borrow more money, right? It's going to cost you to borrow more money, which means that in turn affects businesses like Realty Income. Why? Because they're in a situation where they're dependent upon these corporations and these businesses to continue to pay them to lease the property that they are sitting on, which is owned by Realty Income. So we are aware, all right? I'm very aware. I'm very, very, very aware of all of the things that people might take as a negative, okay, as far as Realty Income goes, because you got to look at it. We got drugstores, right? Everything at the top, or some of their biggest investments, or some of their biggest clients, I should say, are drugstores, which means Walgreens, CVS, right? And then you've got Walmarts, you've got Home Depots, okay? Let me ask you a question. Out of those companies that I just named, which one of those do you think are going to be around for the foreseeable future? At least two of them, right? At least Walmart and Home Depot are companies that we know that we can count on certified, okay, certifiably so over the course of the next 50 years. You know that if you can't count on nothing else, you can count on Home Depot being around, and you can definitely count on Walmart being around, because they're damn near the only place you can go to get a good deal or to get a decent and pay a decent price for groceries now, right? However, we understand that Dollar Tree, okay, and Dollar General, these are other businesses that have a significant number. I don't want to downplay it. There are a significant number of Dollar Trees and Dollar Generals that are under the umbrella of Realty Income. Now, what do we know about Dollar Tree? I just put up a video the other day about Dollar Tree and how they are shutting a lot of their stores. They're they're closing a ton of their Family Dollars, and they're closing a lot of their Dollar Trees, and also they're increasing the the price from $1.25 to $1.50. So listen, I said all that to say that everything is connected, but we have to remember the consumer sentiment, right? The consumer sentiment. Let me ask you a question. Do you think that over the course of the next 25 to 50 years that we'll be done with drugstores? Do you think that over the course of the next 25 to 50 years that we'll be done with convenience stores? That we'll be done with Home Depot? That we'll be done with Walmart? Do you think even over the course of the next 25 to 50 years, we'll be done with places like Family Dollar or Dollar Tree? Listen, people are always going to chase the value, chase a bargain. Sorry. They're always going to chase a bargain. Y'all know somebody right now that's going to chase a bargain no matter what. And so I said all that huge word salad to say that Realty Income, in my opinion, is one of the most stable companies that you can buy or that you can invest in as far as REITs go, because the assets that are under their umbrella are not going anywhere for the foreseeable future. And listen, if Realty Income falls by the wayside, we got a much bigger problem, and you can expect a lot more companies to follow. But right now, with Realty Income being down near some of its all-time lows, I think that right now it's my time to stockpile, okay? And in my dividend portfolio, if you've been following me, Realty Income is my biggest position by far of my dividend portfolio, and I am certainly fine holding that until. And one day I'm going to stop reinvesting my dividends, and I'm going to live and eat off of Realty Income. But let's get some more data, official data. So you go here, and I want to share the top 10 industries. You got grocery stores, convenience stores, dollar stores. This is the percentage, okay? Home improvement, drugstores. So if you look at their top 5, out of those top 5, you might look at grocery stores. Grocery stores aren't going anywhere. We're always going to need grocery stores. So your Walmarts, right? Convenience store, your Walmarts, your Myers, right? Your convenience stores. Convenience stores aren't going anywhere. Now, you may get a different one in the community. One may shut down, but another one's going to open somewhere, right? Dollar stores. You could say dollar stores are on the fence. I wouldn't have a problem with you saying that. Home improvement. Home improvement stores aren't going anywhere. Lowe's and Home Depot at the top of the game. They're not going anywhere. They'll be around for the foreseeable future, especially with all of the DIY videos out on YouTube. They're not going nowhere, okay? Drugstores, I can see if you wanted to say drugstores was going somewhere, but where auntie going to get her medicine from, right? Where grandma going to get her medicine from? Right? Where Pawpaw gonna get his medicine from? He got to go to the drugstore to get that, right? So the rest of these restaurants, quick service, automotive service. Sorry, I don't think automotive service is going anywhere either. Again, shops need them. Everybody uses automotive service, right? Especially people that like to fix up cars themselves. Health and fitness, you could argue, fitness is a dying brand, but you know, with all of the awareness and wokeness today, fitness is never going to go away completely. There's always going to be a gym somewhere, and there's always going to be somebody telling you that you need to get in it, right? Restaurants, casual dining, and general merchandise. So listen, those are the top 10 industries that run Realty Income, okay? Those are the top 10 industries. Now I would ask you, out of those top 10, how many of those do you think over the course of the next 60 years, 50 to 60 years, will be industries that are by and large null and void? How many? Listen, I don't think any of these. Maybe casual dining, I could see. But I don't think any of these industries will totally be gone in the next 50 to 60 years. So I believe that Realty Income, after this stock increase, is doing nothing but furthering. Listen, they've been able to hold on to these dividend increases. You see the chart right there. And it's actually been very impressive. Now, I can understand you saying, well, over the course of the last couple of years, you're not getting a value in stock appreciation. That depends on what you're investing for, right? You have to decide on what you're investing for. Now, let's get into this article for a couple minutes before we get out of here. Realty Income is often considered a stable long-term investment for conservative income investors. It's one of the world's largest real estate investment trusts, REITs, and its tenants include large retailers like Walgreens, 7-Eleven, Dollar General, Dollar Tree, and Walmart. Many of those retailers are resistant to recessions, and some of them even thrive during economic downturns. We definitely know Walmart thrives, right? Even during the pandemic, you saw people in Walmart, up in Walmart with the masks on, right? So we know Walmart's not going nowhere. Even during a recession, Walmart is damn near the go-to place, right? So Walmart's not going anywhere. Dollar Tree actually, honestly, is recession proof or recession resistant, right? Because the more expensive things get, the more we see inflation, the more we see those price hikes at the grocery store, people are going to look for alternatives. They're going to look for cheaper ways to get what it is that they need. That's where the Dollar Tree comes in. Even with it going up to $1.50, it's still, some of those items are still cheaper than what you would pay at a grocery store, right? So, as a REIT, Realty Income is obligated to pay out at least 90% of its taxable earnings as dividends to its investors, which is another great benefit to owning a REIT, right? And as a net lease REIT, its tenants are responsible for covering most of their own expenses, including maintenance costs, property taxes, and insurance fees. That's your triple net lease, right? We're talking about your triple net lease. So if a company or a REIT has a triple net lease, that typically means that all of the costs associated with owning or running that business, rather, goes to that business. It does not fall onto the shoulder of Realty Income, which means that's more money they keep in their pocket, and they let the other company, who is the controlling asset, right, they let them take care of that. That simple business model enables the company to generate plenty of cash to cover its monthly dividend. Despite all those strengths, Realty Income stock has declined 23% over the past 2 years, and its investors fretted over rising interest rates and some challenges for its top tenants. Nevertheless, I believe that pullback is a buying opportunity for 5 simple reasons, and we're going to go over them very, very quickly. This video is already super long. Interest rates could stabilize and decline. The Federal Reserve is widely expected to reduce interest rates over the next 2 years. That's great news for Realty Income, since high interest rates make it tougher to buy properties and make its dividends less attractive. Listen, let me ask you a question. There was a time, right, during the 2008 recession where this was a mirror. To a much greater extent during that time, obviously. But what we're seeing now with inflation, right, and the high interest rates, we've seen it before. We've seen this game before. And eventually, what happens? Things stabilize. Eventually, REITs become the good kid back on the block, right? Eventually, REITs become the superstar on the team again, right? Eventually, REITs start putting up triple doubles again, right? So what I'm saying is, do not get worried, do not get shaken by these times where we're seeing a decline in the price or value of the stock. It's going to bounce back. History tells us that. It's going to bounce back just because of the assets that are under that umbrella. Meanwhile, its declining stock price boosted its forward dividend yield to 5.7%. That's higher than the 10-year treasuries at 4.2%. A lot of this is jargon that you won't be interested in, honestly, especially if you're a newer investor. Let's move on to number 2. Store closure fears are overblown. Realty Income's 3 largest tenants are Dollar General, Walgreens, and I was right, Dollar Tree, which also owns Family Dollar. So really 4 assets. Those 3 tenants accounted for 3.8%, 3.8% and 3.3% respectively of its annualized rent in 2023, which basically means that, listen, it's definitely going to turn heads when you see these businesses going through troubling times as a result of inflation. It says Walgreens plans to close up to 700 stores in the U.S., while Dollar Tree plans to shutter 970 of its Family Dollar stores. So that's where the fears are coming from, y'all. That's where a lot of the fears are coming from. The consumer sentiment surrounding Realty Income is basically, listen, y'all have a lot of assets and a lot of business that are connected to y'all that we got wind of that are going to be closed over the next foreseeable future. So what are you going to do when that happens? You'll be at a loss. So that's where a lot of the worry is coming from. But listen, it says, but that's only about 8% of Walgreens stores and 12% of Family Dollar stores. And Realty Income doesn't own all those properties. If we do the math, those gradual closures should only impact a sliver of Realty Income's rental income from those two tenants. Let me move on to number 3, a high occupancy rate and healthy FFO growth. Realty Income, okay? Realty Income ended 2023 with a high occupancy rate of 98.6%, and that ratio has never dropped below 96% over the past 3 decades. What does that mean? It means that for all of the properties and land and things that they owned, 98.6% of that property is occupied with paying tenants, paying businesses. That's what that means. Okay. And it says it recently expanded its portfolio by merging with Spirit Realty and now owns over 15,450 properties. Okay. Number 4, plenty of room for dividend hikes. Realty Income has paid consecutive monthly dividends ever since its founding in 1969. It's also raised its dividends a whopping 124 times since public debut in 1994. It's only paid out 71% of its free cash flow over the past 12 months, so it still has plenty of room to raise its monthly dividends. And number 5, it's historically cheap, which is what I was saying at the beginning of this video. For me, this is a buying opportunity, but let's read this. Realty Income might initially look expensive with a price-to-earnings ratio of 43, but REITs are usually valued relative to their FFO per share. By that metric, okay, the stock looks historically cheap at just 13 times the company's adjusted FFO per share in 2023. If you don't know what FFO is, here, I'll click on it here and give you a little bit of a more detailed definition of it. But it basically means funds from operations. It's basically how much money are you bringing in for your operating costs minus, the cost of business, right? Your operating costs, and all of that is taken into account and measured up against your earnings, okay? Funds from operations, FFO, is a measure used to measure a company's recurring operating earnings. It's mostly commonly used by real estate investment trust REITs to give investors a more accurate picture of their operating performance, all right? So that's just if you didn't know what FFO is. I didn't want to keep saying that and not give meaning to it in case you didn't know, all right? But listen. We were at number 5, and we're saying it's historically cheap. It says back when Realty Income hits an all-time high of $68.54 on August 15th of 2022. I remember that time because I thought at the time that that Realty Income was about to go through the roof, and I remember Realty Income being close to $80 a share. Right? It got at one point, Realty Income was close to $80 a share. But listen, it says it was trading at 17 times its adjusted FFO for 2022. Therefore, it makes sense for investors to buy the stock right now while the near-term concerns about interest rates and the store closures at Walgreens and Family Dollar are still compressing its valuation. In other words, let me translate. In other words, they're saying while there's a ton of fear surrounding Realty Income as a result of Walgreens, Family Dollars, and going through all these closings, now is the time to hop now may be the time to hop on this opportunity to invest at a price where we're seeing Realty Income at its all-time lows, right? Be greedy when others are fearful, right? This is probably one of those moments, is what they're saying. It all depends on what you're investing for, again. And if you are investing for dividends and long-term stability, then that is where I feel safe. Realty Income is certainly where I feel safe parking my money. All right. And in a price share of, what are we at? 52. I think we're a little over 52. Yep. Current price is $52.69. Listen, I'm about to pile up as much as I can. But y'all let me know what y'all are doing down in the comments. And let me know if you are investing in Realty Income or any other REITs that are your favorites. And I hope this has been somewhat informational. I hope it hasn't been too boring. Listen, I'll see y'all in the next video later.